Most people think the rich just buy stocks, real estate, maybe a little gold if they're feeling fancy. But what if I told you that's just the public portfolio, the stuff they want you to see? The real wealth? It's hidden in places most investors don't even know exist. In this video, we're pulling back the curtain on 8 assets the rich buy that you've never even heard of. And if you stick around, you'll not only understand what they are, but how they quietly compound wealth across generations. Subscribe to the channel and let's get into it. A few years ago, I had a conversation with a friend of mine. Let's call him Raj. Raj was doing everything right. SIPs, index funds, a rental flat he was proud of, and yet his net worth barely moved. Meanwhile, his cousin, who wasn't flashy at all, quietly accumulated millions. No viral side hustles, no penny stocks, no crypto, just a different set of moves. When Raj finally asked what he was doing differently, the answer was so simple it was disorienting. I own things most people don't even know they can buy. That one sentence shattered everything we thought we knew about wealth. And today, I'm going to show you what those things are. Let's kick things off with the first asset the rich often use to build their fortune before anyone even sees it: private equity. While most people are busy scrolling stock charts and debating whether to invest in mutual funds or ETFs, the wealthy are writing checks before companies go public. Private equity is about direct ownership, taking a stake in private companies, startups, or venture funds with high growth potential. And it's not about day trading or hitting some overnight jackpot. It's about planting seeds in companies that can grow for years, even decades, outside the volatility of the public market. Let me give you an example. Imagine owning 10% of a health tech startup that eventually sells for $50 million. Your investment turns into a multi-million-dollar payout without a single stock ticker in sight. Now, yes, private equity comes with higher risk and longer holding periods. The trade-off? You get access to asymmetric returns, the kind of results that don't just grow wealth, they leapfrog it. This is why the ultra-wealthy don't just invest. They partner, they fund, they build value from the inside. And the kicker? These deals are rarely advertised. They come through networks, family offices, and curated funds with 7-figure minimums. But even if you can't invest directly yet, understanding how this world works changes the way you think about opportunity. Because real wealth, it's created long before the IPO. Now that you've seen how private equity unlocks the front door to real wealth building, let's move to something that feels old-fashioned, but still outperforms the market when used strategically: income-generating land. And I don't mean flipping plots in the suburbs. I'm talking about farmland, timberland, even solar farms. Land that works for you while you sleep. It's the quiet juggernaut of asset classes. The kind you don't see on CNBC, but that sits on balance sheets of family dynasties and billionaires alike. Here's the beauty. This kind of land doesn't just hold value, it produces it. Crops, timber, lease payments, even solar energy, all create recurring income while the underlying land appreciates. In a world of inflation and market volatility, this is stability with upside. It's why wealthy investors often buy thousands of acres, not for glamour, but for compounding security. And there's a quote I love here that sums it up. Don't wait to buy land and wait. Will Rogers. The wealthy understand this at a deep level. Land isn't flashy, but it's foundational. And here's what makes it even more powerful. Land is finite. They're not making more of it, and the types that generate income are even rarer. That's exactly what today's video is about. Assets the rich buy that you've probably overlooked includes this one right near the top. It's old school, but it works better than most new school plays, especially when everyone else is distracted. Now let's talk about something that feels intangible, almost invisible, but often becomes one of the most lucrative assets the rich ever acquire: intellectual property. We're talking patents, trademarks, copyrights, and the passive income streams they generate. This isn't about owning land or businesses. It's about owning ideas that the world keeps paying for over and over again. Think about this. Taylor Swift writes a song once and earns royalties for decades. An entrepreneur patents a design and companies license it globally. An author publishes a book and generations later the family is still receiving royalty checks. That's the magic of IP. You don't just build something. You create a machine that prints cash long after you're done working. For the wealthy, IP isn't just creative fluff, it's strategic. They invest in it, license it, and even acquire it when buying companies. Many venture capital firms don't just look at revenue. They evaluate the strength of a startup's intellectual property portfolio before investing. Because if you control the rights, you control the revenue. And better yet, these rights can be transferred, sold, or passed down like any other legacy asset. And just to make this real, companies like Disney, Microsoft, and Apple all make billions every year just from licensing. If that sounds out of reach, think again. You can write a book, license a course, file a trademark. Start small, but start like someone who sees IP not as fluff, but as fuel. By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" so I know. Let's keep going. The next asset is a masterclass in legacy. We are talking about the invisible glue that holds generational wealth together, family trusts. This isn't just about legal documents. It's about control, intention, and making sure assets survive beyond one lifetime. Family trusts are how the rich ensure their wealth isn't just protected, but guided. It's not just a way to pass on money. It's a way to pass on values, rules, and a blueprint for decision-making across decades. Here's the reality. The average person might build wealth, but when they pass, their estate goes through probate, taxes hit hard, and heirs get cash with no structure. The wealthy? They set up irrevocable trusts that protect assets, avoid legal battles, and define exactly how and when money is distributed. Want your grandkids to only receive funds if they graduate college? Done. Want your business shares to stay within the family? Locked in. These trusts are often paired with family offices, full-scale private firms that manage everything from investments to taxes to succession planning. And this is why we had to include family trusts. Because while everyone else is talking about how to get rich, the wealthy are focused on how to stay rich for 3 or 4 generations. Trusts are the infrastructure of generational control. And once you understand how they work, you'll never look at inheritance or even your own estate plan the same way again. Now, let's switch gears and look at something that flips the entire financial system on its head. Instead of borrowing from banks, the rich become the bank. It's called private credit, and it's one of the least talked about, yet most consistent wealth strategies out there. In simple terms, private credit means lending money directly to businesses or individuals outside of traditional banks and earning fixed interest in return. But here's the twist. These loans are typically secured, negotiated, and structured to protect the lender, not the borrower. So while the average person is worried about fluctuating markets, the wealthy are collecting interest income with clockwork reliability. Imagine lending $100,000 to a growing company at 10% interest, secured by real estate or business assets. That's $10,000 a year, without managing tenants, trading stocks, or chasing market trends. And because these deals are often tailored privately, the lender can define the terms, repayment schedule, collateral, even performance clauses. This strategy used to be limited to hedge funds and private family offices, but it's becoming more accessible through curated credit funds and peer-to-peer lending platforms. Still, most people have no idea this world exists, because being the lender, not the borrower, is one of the most powerful financial positions you can hold. Let's now talk about one of the most underrated and frankly, romantic forms of wealth preservation. Rare books and manuscripts. At first glance, it might sound like a collector's hobby, but dig deeper, and you'll find a serious asset class used by the ultra-wealthy to store value across generations. These aren't just old pages, they're historical artifacts, cultural milestones, and financial chess pieces all in one. Some of the world's richest families store them in climate-controlled vaults. Others lend them to museums for prestige, while still retaining ownership. Why? Because scarcity drives value. There are only so many first-edition Shakespeares, original manuscripts, or hand-signed scientific papers by people like Einstein or Newton. As time passes and supply shrinks, the value rises. And unlike stocks or crypto, these don't crash because of bad headlines or inflation reports. Here's a quote that captures it best. "Preserve your history, and you preserve your wealth." That's exactly what these assets do. They represent legacy, not just in knowledge, but in capital. And when done right, they can be passed down, sold for millions, or used as leverage in estate planning. Because while everyone else is chasing what's new, the wealthy often invest in what's timeless. Now that we've explored books that appreciate over centuries, let's talk about an asset that evolves daily and often delivers the highest ROI of all: human capital. See, while most people are trying to buy the next hot stock or real estate deal, the wealthy invest in people, specifically elite talent, top-tier mentors, and high-performance teams that can multiply returns far beyond what any single investment could. Look at any major acquisition made by a billionaire or private equity firm, and there's one question they ask early on: who's on the team? They're not just buying products, they're buying leadership, vision, execution. Why? Because an A-plus team with a B idea will outpace a B team with an A-plus idea every time. That's not a theory. That's how empires are built. Human capital shows up everywhere, from CEOs paying top dollar for executive coaching to investors backing startup founders who failed before but learned how to win. It's the reason why some companies are bought solely for their engineers, and it's why wealthy families often spend just as much time developing successors as they do managing assets. Here's the part most people miss. You don't need millions to invest in human capital. You can start with your own. Learn faster. Partner smarter. Surround yourself with people who force you to level up. Because this asset, it's scalable, renewable, and transferable across every project you touch. And speaking of smart investments, the next one might sound boring, but it's the reason billionaires always have ammunition when opportunity strikes. Ready for a reality check? Let's talk about cash. Let's finish strong with the asset most people overlook, underestimate, or flat out misunderstand: cash. Not the save $5 a day and skip lattes kind, but strategic, high-volume cash reserves that the wealthy hold on purpose. Because when markets crash, deals appear, or businesses need capital fast, the person with liquid cash becomes the kingmaker. Here's the irony. While most people are told to invest every last rupee or dollar, the ultra-wealthy often keep significant capital uninvested. But not idle. It's sitting, watching, waiting. And when something valuable suddenly gets mispriced, they move. No loan approval needed, no panic selling required, just strategic deployment at the perfect time. Think of cash reserves like dry powder in a cannon. They don't look impressive sitting there, but when used at the right moment, they change the entire battlefield. The rich know that wealth is built not just by owning great assets, but by having the liquidity to seize them when others can't. And speaking of purpose-driven wealth, that's what I'm testing right now. I'm building a Google Sheets command center, something simple but powerful. It's designed to help you track your net worth, investments, income, cash flow, spending habits, and even your compounding progress, all in one place. It's not just a tracker, it's a strategy hub. The kind of thing I wish someone had handed me 10 years ago. If enough people want it, I'll launch it soon. And there'll be an exclusive launch discount for early supporters. You can join the early access waitlist link below. The tool will cost less than one bad financial decision, and that's the point. Now let's zoom out and wrap up what we've learned. Let's take a step back. Today, you didn't just hear about 8 assets. You got a glimpse into the real playbook the rich use to build, protect, and preserve wealth across generations. From private equity and productive land to intellectual property and family trusts, these aren't just investments. They're strategic moves, layered, intentional, and built to outlast market cycles. We saw how lending through private credit flips the system, how rare books store cultural value, how investing in human capital unlocks infinite scale, and how holding cash reserves gives you the power to act when others freeze. Here's the part. No one says out loud, you don't need millions to start thinking this way. You just need a shift in perspective. Start by tracking your finances with precision. Understand where your money flows. Save with intention, not just guilt. And when the time comes, whether it's licensing a product, investing in a private fund, or setting up your first trust, you'll be ready. Because the real edge isn't access, it's awareness. So don't try to copy every move the wealthy make overnight. Pick one idea, one action, one step that aligns with where you are, and do it consistently. That's how all of them started, not with secret knowledge, but with the decision to play a longer, smarter game. Remember, this video is for educational purposes only and does not constitute investment advice. It is important to conduct thorough research and consult with financial professionals before making any investment decisions. The value of investments can fluctuate, and past performance is not indicative of future results. Always assess your risk tolerance and investment goals before allocating your capital. If you found value today, I highly recommend watching my next video. Don't forget to like, share, and subscribe to our channel. Also, feel free to leave your comment below, especially if this video made you think differently. I appreciate your support more than you know. Until next time, stay consistent, stay patient, and stay winning. See you in the next one, Money Magician.